Good afternoon, good morning, good evening. I don't know where you are in the world, but welcome to Take Stock Live. I hope you're doing well and happy. This is Sam Evans joining you for this next 35, 45, maybe 55 minutes or so. I'm so glad to be here as well. Take Stock Live is brought to you by StockAbility.com. I hope you're having a great week today. It's May 27th. Oh my gosh, we're nearly at the end of this month. Can you believe it? And here we are in for a great show. Well, we're going to be talking a little bit later on about charts versus news. What a great subject. Something that we get constantly emailed about on the show as well. And I'm going to be joined by my regular co-host, Brian Dumaresq, our momentum coach over at StockAbility.com. This is back to our regular time. It is a Thursday. It's just gone 12 noon here on the East Coast, 5 p.m. London time. And we are here on Facebook Live, but we're also simultaneously broadcasting on the YouTube channel as well. We are going out on YouTube, we are going out on Facebook Live, and heck, we might be going out on a few more streaming services as well in the coming months as well. We are all over the place. It's great to have you here as well. Remember, this show is live, so you can type your comments in straight into the Facebook page as we're doing this live right now, or you can go onto the StockAbility YouTube channel and you can type in comments there as well. It's great to hear everybody coming in, and please ask questions. This show is for educational purposes only, and also, I say, entertainment purposes, edutainment if you want to call it that. We are here to lift the lid on trying to make trading and investing and understanding the financial markets just that little bit easier. Okay, I'm not a rocket scientist. I'm not an economist. I'm not somebody who looks at Keynesian economics or anything like that. I'm somebody who looks at the markets and makes a decision whether I should buy, sell, or do nothing. And how can I negotiate these financial markets in a safe and hopefully enjoyable as way, using the market to achieve the specific goals, no matter how big or how small they may be for myself, and hopefully spreading that and helping other people achieve that as well. Every single week we like to cover a different topic as well. And if you're brand new to the show as well, you'll find that we say what we want to say. We're respectful, but we tell it like it is. No sugarcoating here. If you want sugarcoated, go to the local Dunkin' Donuts, okay? We're here to tell it how it is. And right now, these markets have been challenging for a lot of people. And I thought on today's show, using price versus charts would be a fantastic way to kind of shed some light on it. And Brian's definitely got a lot to say on about it. I always have a lot to say on it. And later on, as well as going through that, we are going to be doing our real-time analysis with your call, my put, where one of us is going to be bullish. That means we think the market's going up. And one of us is going to be bearish, which means we think the market's going to go down. And we're going to take a look at that. Sometimes we look at currency. Sometimes we look at commodities. Sometimes we look at bonds. Sometimes we look at stocks. Who knows? But we're going to do that a little bit later on today as well. If you're brand new to the show, welcome. All of our regular viewers as well. Good to see you guys here. Happy to give you a shout out when you're on here as well, and we'll go through it. So let's take a look at today's day and see where it is. I tell you what, it has been if I was to sum up the day today, I'd just go meh. That's what I'd really say today. I was in, out, done in about 10 minutes or so, and I've been focusing on some other things. I'm recovering as well. I've had a little bit of surgery recently, so I'm trying to take it easy too, and I wanted a short day, save my energy for doing this show. But looking at the markets right now, we are in Dojiville. If you're brand new and thinking, what the heck does that mean? Doji is a kind of chart pattern when really we've got indecision in the markets. Let's go and take a look at the charts, and I will show you exactly what I mean. Here on my price charts, everybody, we always like to do a little overview of the overall market itself as well, and this is our show. This is our market right here. Guys, I'm going to start with the mighty S&P 500. And this is exactly here what I'm talking about when I'm talking about a doji, okay? We're kind of open and close at the same price today. Open price was around 4,200 on the S&P today. Not at the highs. 32 points off the previous highs, which were at 42.32. We are nowhere near those highs right now. And this market is just going, eh. We've had a slow grind back up. We've been looking for this whole formation on here, which we call a double bottom, which is still here. But I got to say, the problem with where we are right now is not a place that I want to be going in holding. Tomorrow is the last day of the trading week, going into the first major holiday here in the US, Memorial Day weekend as well. Remember, markets are going to be shut on Monday. Are we going to see some action taking us out at the end of the week? I personally would not be surprised to see a flat day today. I'm not expecting a flat day tomorrow. I see a little bit of more movement in the market tomorrow. But again, I said this to you right now. These are difficult market conditions to be a buyer. I still believe this market's got upside potential, but we are definitely under some kind of pressure right now, and the S&P just off of those highs. Let's look at the S&P's little brother. Let's go to the Dow Jones. Now, guys, if you're looking at these charts going, well, what does this mean? Why have you got this thing here that says YM? What does that mean, YM? That is a future symbol, ladies and gentlemen. That is a future symbol which is basically the code or the ticker symbol we use for the futures contract of this underlying. So you can look at the Dow Jones as a stock index, actually as a non-tradable cash index, or you can look at it as a futures contract. They are moving in line with one another when these things are on there as well, guys. So that's what I like to look at, is the futures market. If you're confused about that, go over to StockAbility.com. Our recent article from lead coach Ryan Watkins talks all about those specifics of how to chart futures versus stocks on here as well. Looking at the Dow Jones right now, trading today, as we can see, at around 34,423 on the mark right now. Look at that for a round number. Previous highs were in place at here at 35,000 points that we had. And after putting in that, what did we see? That push down, really bit retracement. We double bottomed a bit. We've got a wide open space right here. I see a lot of pressure at this 34,750 area going into next week. I would be shocked to see that thing just easily close up. That gap there is going to be considerable pressure on there. So I do expect that we could be getting a little bit of downside, or at least some pressing here. The only saving grace I'd say on the market right now is we are forming some support levels, albeit not great ones, around the 34,000 point. Again, I like this. It's got a little bit of room for the upside, but today, believe it or not, I made my money on the upside, getting long on the open, took a very quick, easy profit, and I'm glad I'm out, because now market sold off again as well. You've got to be ruthless if you're a day trader. You've got to be holding out a little bit more if you're not. Okay, different styles, different approaches in the market as well. Let's go to look at the tech giant, which is the NASDAQ index here right now. NASDAQ, literally, it is a pitch perfect mirror of last week. We had a tremendous move in the market last week. Market coming off of its lows, forming a massive support zone, testing 13,000 points, now at 13,700 and change. The highs way up here, okay, at 1460. We are way off those highs at the moment, and to me, this is dicey. Are we in an uptrend still? Are we maybe in a downtrend? I don't know. I've been kind of playing my cards very close to my chest on the tech stocks. I have inherently been a little bit more bearish on the tech market. I'd love to see what Brian thinks about that. But at the moment, I hear nothing I'd want to do on this. Might be a great opportunity to buy some cheap puts on this. We'll see. But man, I'm not going to hang around. If I don't get some action on these things, I'm not going to give up 3 whole days of time decay going into the weekend. So NASDAQ, QQQ, guys, you guys buying puts on the market right now. I'm going to keep those durations of those holdings pretty short term. And the reason I'm going to do that is because I don't want to pay for that in that premium if I'm buying any options on here. I think Tuesday, if we don't see a lot of action going into the market tomorrow, Tuesday could be a fun week. That could be a fun week. But remember, we're coming into the summer season. Traditionally, those summer seasons, markets do tend to be a little bit quieter, okay, during those summer periods. I got to say on here, though, I don't believe in all the urban lifts. I just look at it and find it, trade it how I see it. And if there's action, we'll trade it. And if there's not, we'll go do something else. Coming into a major resistance area here on the Russell, which has had a tremendous open to the year. And ever since then, doing F all is what I would say. Okay, not a whole lot, right? We are just choppy in the upper point of the range. Equilibrium point, as I've been stated many times, right here at 2,200 points. Not a lot going on this market as we speak. And we're at the upper range here. Certainly in this region here, I do not want to be a buyer. We've already gapped up. We've hit great profit-taking area if you have been enjoying some of this upside, but really a great profit-taking area. So what we see in these indexes, which is really interesting to me, is that we're getting 2 markets out of the big 4 that are looking strong and 2 are looking a little bit weak. All right, that is a classic sign of indecision. We're getting a lot of disparity between the markets, okay? We're seeing a lot of divergence, not convergence in the markets right now. And with that being what it says, that makes it an incredibly challenging scenario to deal with. An incredibly challenging scenario to deal with when you're on the markets as well. So again, for me, short term is the name of the game at the moment. Just getting in, getting out, and looking for more independent opportunities on maybe Forex, commodities, and some of those other markets as well. Across the board, let's go take a look at the overall markets and see where we're at. Microsoft having, like I say, a pretty flat day, just down 72 cents on the day. eBay down 10 cents on the day. Let's look at Apple here, 6 cents on the day, 7 cents. Not a lot. Even Tesla only moving 5 cents so far today. Facebook up $4, having a nice bounce back. That thing has just been going. One of the ones we have been bullish on in our guided trade sessions at StockAbility on here. But just looking across the board at all of these net changes today, nothing really of any major movement of consistency. I got to say, just being based off of all of this, kind of what I'm seeing here, this is a great time to just say, you know what, I'm having an early Thursday. Heck, I'm going to go and do something else. And it's not really surprising when we look at this, guys, because really when I see this market, News-wise, there's really not a lot in the news to be talking about. I gotta say, there's not a whole lot to be talking about in the news right now. Let's go and see what's capturing the headlines today. The major thing is, yeah, S&P did open up relatively flat after inching back towards its record after that sell-off it had, which was like, oh, wow, great bounce back. But really, I think if you look at the economic data, we've had a whole slew of economic data come out this week. 3 major reports came out. The first of these major reports was the initial jobless claims for last week, which fell more than expected to 406,000, which was another pandemic era low compared with an unrevised 444,000 new filings in the prior week. So jobless claims are down. Good for the economy, you would think. Is the market saying, woohoo? No, it's not. It's kind of going, okay. On the other flip side of this, the second estimate of the first quarter gross domestic produce, GDP, did hold steady at an annual growth rate of 6.4%. In the fourth quarter of 2020, GDP increased by 4.3%. So again, pretty good, looking good. So at the moment, jobless claims are down, employment's holding steady, GDP's holding steady. April durable goods orders, though, did drop 1.3%. Okay, which is a little bit more. Economists have predicted we'd be about 0.91%, so a little bit more, okay, after being revised from 1.3 in March. Really, it's a mixed bunch. 2 out of 3 is telling me the market's looking good economically, but then here's the thing. There's always a delay, in my opinion, between the news and the reality of how it comes in the price as well. Or does the price happen first and then the news? Who knows? There's a whole lot of things going on in this market. And this is a major question that I've had multiple times over the years is, well, Sam, what do we follow? I mean, what do we actually follow here? Do we follow the news? Do we follow the charts? You see here on TakeStock Live, we have the charts up a whole lot. I'm constantly going over to these charts, showing you different perspectives of the market, looking at our charts, looking at all these different things to get clues. But then there's all this news flooding at us constantly as well. So I guess the question is, what do I follow? It's a great question. It's one we should all be answering. And if you're brand new to the market, it's definitely one of the very first things that you want to be paying attention to. Hence, today's subject is price versus news. What is going to give me an edge? To join me in this discussion today as well, I'm not going to be doing it alone. I have a regular co-host. I now call him, he's had an upgrade, guys. He's been given a promotion. He is now not just a guest, he's my regular co-host because he's probably done more TakeStock Lives with me than anybody else, even though we bring a whole group of guests on here. Ladies and gentlemen, student momentum coach at StockAbility, Mr. Brian Dumaresq, my co-host. Where is he? There he is. How you doing?
I'm good. How's everybody doing? All right?
I think they are. Come on. What do you think about your promotion, regular co-host? Did that make your day or what?
It did. It made my weekend. I'm actually going to stop early today. I'm so excited.
I'm going to have a quiet day now, thanks to you. Yeah.
Yeah, exactly.
Excellent. Well, no, you have done more of the shows than anybody else as well. We always have a good banter on here. And I know that with your own background, we were just chatting yesterday when we knew we were going to do the show, and we were like, thinking about the next subject. Because what we started to do, ladies and gentlemen, is started to take requests as our viewership is increasing, slowly but surely. You just watch. You're going to see people saying, hey, could you talk about this? Could you talk about that? It'd be really good. Last week we talked a bit about Forex, but here on the show on TakeStock Live, we definitely have I'm not going to say a bias, but a favoritism towards using price over news, but we do talk about the news. And it's a great thing for any new investor or trader. Because should you be using the news or should you be using just the price, right? These are massive, massive questions to ask, Brian, as well. Did you find it was a challenge for you? Because your background was, well, being on Wall Street, you probably never really used the news. You guys were creating the news where you were as well. So tell us your take on it and then let's discuss this thing.
Yeah. So, there was always a saying on Wall Street, buy the rumor, sell the news type of deal. That is true, to an extent, not all the time, but a lot like these big institutions, they already know what the news is going to be before it even happens. So a lot of the stuff that is going to happen is already baked into the movement of the price. It's usually the amateurs that are chasing after it and chasing their tails around. Okay. I was related to a lot of the, so-called movements of stocks just because of, my job, working on the floor. I executed the trades for the big institutions and all that type of stuff. And, there were many economic events or news articles that were coming out that I was affected by. And I'll give you an example. Like I remember all the time, the oil number would come out at 10:30 and I would have 200,000 shares of, say, ExxonMobil to buy or something like that. And I would call the trader on a desk. I'm like, hey, do you want me to continue to buy this or walk away with a number to get out? And the guy would just yell at me all the time, just buy it, just buy it. I don't care, just buy it. My customer wants to buy it. I'm like, okay, all right, whatever. That was a daily event. But, we had a lot of respect for each other. But the one thing that I really want to talk about today, and I think that a lot of people don't understand the rules and regulations that go on behind the scenes, and that's when a company announces a buyback. Apple or someone like that could say, I'm going to buy back $5 billion worth of, inventory or something like that. And all of a sudden, what does that do? It creates a huge move in the market, in the price, just because people are now like, oh, they got to buy it,
And
However,
and for a novice, before we go any further, because this is a great subject, by the way, think I'm me like a complete novice. If you're looking at the show right now, well, why would a major company like Apple want to do a buyback in the first place, Brian?
Dividends, they want to do pay dividends. They want to do it to, get more money or something like that because they want to expand. I mean, who knows? There's a million reasons why they could do it. So, but getting back to, everything that happens, is regulated by the NASD, the SEC, and stuff like that. And, so they have to abide by these rules. When I worked at DLJ and also Bear Stearns, we actually had a corporate repurchase desk where people only specialize that. They would go out and talk to the companies and come up with a game plan on what they wanted to do beforehand. Now, when it finally got down to me, and I was physically executing the order for them, first of all, they couldn't trade the first 20 minutes of the day. So 9:30 till 10:10, 10 to 10, they couldn't trade. And at the end of the day, I believe it was the last 20 minutes as well, because they don't want to manipulate the price at all. They couldn't be more than 20% of the overall volume on the day, and they could not pay what's known as a plus tick. Now, a lot of people don't know this, but I'm going to probably say 15 or 16 years ago, if you want to sell short, okay, meaning that if you think the market's going to go lower, you could only sell it on a plus tick. And then they got rid of that rule, and then that's when it turned into the Wild West, where you could sell short and hit. Like if you don't know what a plus tick is or a minus tick,
right?
Say something's trading at $80.
Yep.
And that's a neutral tick. If you pay 81, okay, that's a plus tick. You're paying across the market.
The market price,
right? And then if it keeps trading at 81, 81, 81, 81, that's just going to be a zero plus tick. But if it goes back down to 80, then that's a minus tick. So you can't sell short on that. So now, it's important because you can't, like, say there might be 200,000 shares offered at a price, and the company has enough inventory and they're well below their percentage for the day and they want to buy it. They have to wait for literally 100 shares to tick before they can buy the whole entire thing.
Different game, so different, very different.
It's a different game, But the point I'm trying to make is when people say, "Oh, Apple has announced a buyback," and that's why the market's gonna be screaming or whatever. I get it, but when it comes down to it, it may take them 2 years to buy all that. It's not like they're gonna go out and buy it in a week. Right. And that's like the misconception where people don't understand. You don't know what you don't know, and I just want to clarify it. So if you see it again, you want to pay attention to say, okay, this does have a positive sentiment because they're announced a buyback. But once again, it's going to go back to where do you want to get in? All right. As the amateur.
It does, right? That's exactly
does.
Where it always comes back to. We've talked about this multiple times here on the show, haven't we? And it doesn't matter what your approach or methodology is. You got to know where you're going to get in, and you got to know where you're getting out. And knowing where you're getting out is knowing where you're getting out if it works, and knowing where you're getting out if it doesn't, right? I mean, that's the two things on here. For me, Brian, I've been in this business for pushing 18 years now, since I very first started, excuse you. And
thanks.
It's when I first started, I was literally overwhelmed. And if any one of the viewers is looking at this right now and saying, look, I get this real interest, man. I got an itch I need to scratch. I want to get in the markets. I hear everyone talking about it right now. What you hear is horror stories of people chasing price, making bad decisions. And then you think, well, those people like GameStop is back in the news, having another surge today. I'll go take a look at that with you in just a second. Again, I'm not interested in it. I couldn't really care, to be honest with you, about what that's doing. I mean, it looks like you're having a great day. Trust me, it's not having that great a day compared to where it's been, right? The point I'm trying to make is all this news comes out and then you hear all these horror stories of people who are struggling. And then you think, well, maybe they're not in the know. Maybe they don't know what some of the big players know. Someone must know more than me. And then you get caught into this, cat and mouse game where you think to yourself, well, I need more information. So you go to websites, right? You start then going to websites where, you know, you could get a little bit more information, right? So let's take a look over here. We could go over to a website like, this is one of my favorites, Brian, that I know you've seen as well, is forexfactory.com, right? And we can get all this information. You can go to investor.com and all this thing, and you can get all this data. But then the point is, then how do you sift through it? Because to me, when I look at all that kind of data on the screen there, and then I look at a chart like this of like a GameStop, you know, what's going on right now and all this tells me way more than I'm ever going to see by looking at something like this, you know, all this information here. So we get into this realm of price, you know, versus the news. How difficult, and before we kind of break this down, I don't know about you, when I first started, it was so hard for me, Brian, to just not be able to resist looking at information, resist looking at, hey, what's the news today? What's happening? And then pull the trigger. Did you have the same? Do you think most people who you work with, because I know you had a different start to it, as we've established, but now as a momentum coach, do you still find people struggle to resist the urge to look at the news and find that bit of information rather than just making an objective decision based on the market itself?
All the time.
Yeah.
All the time. And, you know, you got to understand something. Like these big institutions, they have teams of analysts, economists that went to Wharton Business School or Harvard or these big schools.
Yeah.
And this is their specialty. So they take those numbers and they break them down.
Yeah, they do some serious analytics, like mathematical, quantity.
Oh, big time. You know, they're looking at a million different things. Okay.
Their view of fundamentals is not what's on the front page of, you know, the newspaper or what Jim Cramer says, you know, it's very different.
But even, you know, you'll see an analyst that covers a particular sector. I remember I was very friendly with this guy at DLJ, and he had a huge name in the supermarket retail sector.
Right.
And he would travel to all the corporate headquarters of all the companies and talk to them and break down the company, find out what their plans were.
He was actually going to the businesses themselves.
Oh yeah.
It's
called a road show. They would go on the road and they would visit all these different companies and find out what was going on, and then they would break it down and say, okay, they would have this giant formula, I guess, and figure out what the company was valued at or what potential it was going down the line. I remember this one guy told me years ago, he's like, Costco is going to be a monster. And, you know, I'm going back 15, 20 years ago. And I'm like, okay. And he'd explain to me why. But I knew him outside of work, you know, as well. And, but he would break it down to me. And I'm like, okay. I'm like, this is way above like my education level. But it was interesting to see that the work that goes in behind the scenes. It's not like they're just going to say, oh, the earnings are out. But, you know, sometimes they're looking for a particular number in their earnings, or if it hits, or if it's light, or if it's too much. Not too much. It's never too much. But, you know, more than they thought or whatever. But everything means something to these people.
Of course.
Okay. You know, but that's for them to figure out. I can only go by what is the chart telling me. Because I don't have access to all that information.
We don't have the same resources. I think that's the thing you just got to accept is they've got more money, more connections, more resources, the ability to go out there. Like I said this right now, you know, in Apple, they're already talking about the next iPhone, the iPhone 13, right? The 12's just come out. And it's like, well, the 13 says this. Who do you think's out there? They're out there looking at the factories, looking at what's going on, you know, understanding everything that's happening at any given time. I don't have the ability to do that. I'm too busy running a company, trading, looking after a kid. So I have to make my decision based on different things. And I think that there needs to be a level of acceptance that you just can't do what they do when it comes to research and analysis. Would that be a fair way of putting it?
Yeah, of course. You know, I mean, I can't even tell you how many times I've come across people like anywhere and they're like, oh, I'm going to buy XYZ. And I'll look at a chart and I'm like, why are you buying it here? And they're like, oh, well, I heard that it's going to be, you know, their sales are going to be better, or they're going to be getting a contract with this person or that company or whatever. And I'm like, okay, so you're basically, it's a lottery ticket right now is what the way you're playing this. That's what it comes down to.
They've got a secret that no one else has got. Like I've heard, I'm like, well, if it's such a big secret, why the freaking hell do you know it? Right?
Yeah. Like you got somebody on the
inside. Because if
it
was, because I'll tell you this right now, if Warren Buffett was giving me a call saying, Sam, you're a good guy, I want to tip you off on something I'm doing, the last thing I'm going to do is share it with anybody else.
Yeah, exactly.
Right? I'll be, thank you, Uncle Warren. I'll take that one. Heck, I wouldn't tell my wife. I wouldn't tell my own mother for fear of like messing up the deal. You know what I mean? It's like, be realistic at this point. You know, be realistic. Yeah, great. Got just coming in. Let's just give a shout out because the questions are starting to come in. Rosie check-in. Chukwama Oreki, good to see you on here. Kay Leffley, how you doing on Facebook Live? Coming in through YouTube as well. MNK is just saying, Brian, how much of an edge does all the extra trimmings give these institutional guys? I think we can both answer. That's a great question. How much of an edge does all this extra trimming give them? Well, their business model's completely different. Let me answer that first. I'll get Brian's take on it. Their edge is to be able to get in super early. That's the edge. So for now, if there was a new, like if you're following the mining sector or firm and there's a new, mining company that's just found a great new dig that they've got exclusive rights to, or maybe out in Silicon Valley they got their guys and you've got one of the tech companies who've just developed this brand new chipset technology, and again about it on the inside as an institution. What are you going to do? You're going to wait till they release that information to the general public, or are you going to start investing in it now? The edge that they have, I feel, is it gets them in that bit earlier. The problem then happens is when people buy into it after the move has happened, right, Brian? And then what happens? And I'm going to do a little diagram on this, but that's what I would say, it's all of a sudden Warren got an English accent. Love it. Not quite. And literally, and got de-aged as well. But now the point is that, to answer your great question, MNK, the thing is, it literally is that I think people don't realize that it just gets them in that bit earlier. They're trading big size. There might be limited inventory of shares available. So they're just going to snap up what they can before it goes public. It's what they then do and what the public does after it goes public. You want to add to that, Brian? And I'd love to do a little diagram and show people this.
So first of all, the big institutions are not always right.
No, they're not. Let's remember that too.
Yeah, let's remember that. Okay. And when they want to get out of something, they hit the throttle down. Okay. That's why you see these massive sell-offs sometimes on, any type of stock or whatever. But what they're doing is they're like trying to gather as much information. They're building a case on why they want to buy something or short it, for that matter.
That's what it is.
Okay. Yeah. And that's all they're doing. And they're taking, I don't want to use the word gamble, but that's kind of the word that I think is appropriate for this situation. And they're taking a gamble or a shot on being on the right side of the trade.
I would agree.
And they know where they're wrong. And if it goes against them, they start getting out. They maybe do some option plays to hedge themselves or something like that. But they're doing what they can to give them the best advantage they can, whether it's the fundamental, it's technical, it's getting out there and looking at all that type of stuff, talking to the companies and seeing what their goals are and what they want to do going forward. And by the way, think of it this way too. If you're watching the news, all right, and a CEO goes on there and you could look at a chart, you see the chart's in a real bad downtrend or whatever it is. Do you think the CEO is going to get on there and say, our company is great, it's doing this, it's doing that, blah, 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 whatever? He's got to talk it up, okay? But he can't go out there and say, our company's going into the tank, it's in a death spiral right now. No. So when they get on the news, they're trying to pump it up, they're trying to talk about things, or, the news is trying to talk about the next trendy thing, okay? I remember a couple of years ago when Tilray, the marijuana stock, was real hot. A friend of mine actually, a tip that from somebody that actually worked out really well. I think it was around $50 or something like that.
Right.
A friend of mine says, "Oh, did you ever hear of Tilray?" Now he's a corrections officer. I'm like, "Why is he telling me about Tilray?"
How does he know about this?
Yeah. So I just started looking it up. Literally 3 days later, okay, it was all over the news because it was up about 100%. I don't know if you guys remember that it just exploded.
Well, let's take a look at it while you're talking about it. There you go. Here it is. I pulled it up. There it is.
Yeah, right here. There you go.
It is for you. Right there, my friend.
Yep. So
Look at that
back.
chart. There's Tilray right there. Look at what that thing did. Tell us to carry on the story. So this is a corrections officer who gave you this tip, right? Let's go.
Yeah. His brother-in-law is, I don't know, tied in with some pretty heavy hitters, and he was telling him about it, and I can't see the date on there, but this
was happening here. I'll zoom in for you. Let's go take a look on here.
It was before that because...
Oh, yeah, this was another surge that we had on here. Let's go take a look at this.
Well, how would you like to have been...
Well, here's the first one. Here's the first one. Look, let's just zoom in here. Here it is. This was the first one going way back on here.
September of 2018 was when he was talking to me about it. Okay?
Yep. Huge.
So... I was like, oh, I don't know anything about it. Next, boom, it took off.
September 2018. There's the candle right there, ladies and gentlemen. There's what Brian's talking about, right?
Yeah,
with a high of $300 that thing put in.
How would you like to have bought that, been the person who paid the high of that? And right now, I don't even know where it is, $15, $16
Well, let's
or
take a
something
look,
like that.
shall we? Let's zoom out and see. High was 300, and right now trading as we zoom in 1666 as of today. No
So
doubt there's people holding on to that as we speak still in their portfolio, Brian, right?
that was exactly my point. Where when you don't have a plan and you get in for something like that, okay, you know, that person probably bought it. Oh, it's still right that marijuana is going to be legalized. It's this, that, whatever. There's going to be so much upside, blah, blah, blah. And they start talking this stuff up in their head. But the professionals know what they're doing. I mean,
Of course
look,
they do.
it went all the way up. They're the ones who were probably selling it off after they hit the lottery. The IPO, I think it was in June or July of that year. It's a Canadian stock as well. And then all it did was just sell off. All right. It came all the way back down. All right. Now the person who bought up there, the retail person who now it turned into a buy and hold because now they're stuck.
And
So
don't
now what
get
they're
me
doing
wrong, those institutions, those big boys were probably buying way down here. They were probably buying it months before that, right? Because that's the
yeah,
point. That's the pump and dump. They've took it from here. I'll get my head out of the way. They took the thing all the way up. They're selling it to you at that particular point. And if they did want to buy back into it, they probably bought back into it way down here again, right?
yeah.
I
So,
mean, that's the
so
reality of it.
well, what happens a lot of times is when Tilray or any company is going public, they have their team, okay, like their analyst team will go around to
Yeah.
customers, different institutions, and say, hey, we're bringing this public. We are going to have 20 million shares. I'm just making up a number, and we can allot you 1 million shares. Do you want this?
Yeah.
And they usually go to the biggest institutions that pay them the most commission dollars, and they work their way down. And those people will get in at the IPO price, whatever that may be.
Mm-hmm.
Now, I don't know what the rules are. I forget on how long they have to own it before they're allowed to sell it. But then, what the people who missed out on it, once the IPO comes to the public market, that's when you could buy and sell and freely.
Right.
Okay, the
Absolutely.
retail and the other institutions who missed out. But that's what it did. It was just an impulse move to the upside because it was an emotional trade. I mean, you could just tell by the way it traded. And all of a sudden, what did it do? It came right back down.
Well, there's another emotional trade for you right there. GameStop. Look, same thing. 483.
Oh yeah.
Yeah. Oh, great. It's had another surge. 237. Still, those people desperately holding on. And I know a lot of those guys are options traders. Oh, well, they're okay. Are they? Because I tell you what, those options are gradually losing value every single day as well.
Yeah,
AMC, another one, that's all over it right now. Woo! Another surge on here as well, But again, it's because it goes up, comes straight back down again. It becomes pure gambling. And again, I don't understand how people think that they could have any kind of an edge in that, And suddenly, I like, as MNK says on here, all of a sudden the trader who bought at 300 on Tilray becomes an actual investor because they're forced to actually become an investor.
Is that Nor?
Yeah, I think it is. I think it is.
What's he doing up?
Yeah, you're going to get some sleep, Nor. Honestly,
Yeah.
my friend. Get some sleep in the middle of the night for you out where you are in Dubai, my friend. A couple of other shouts out there. Javier Joe, nice to see you on here. Louise Fox, happy birthday for last week as well. Brian Dennis, love to see you back on the show again as well. Great to have you guys here. But yeah, I mean, look, this is it. It's the same thing. It's never going to help you. So look, we're always going to get, Brian, the individual, like the Tilrays, the GMEs, the GameStops, all that, kind of thing, going on. You're always going to get that. But again, I always say this, I feel like everyone's always looking for that next big get rich quick scheme. And man, I don't even concern myself with it. We all get lucky. Now and then, or sometimes don't. But we got to get something that's consistent that will last the test of time. And, one of the things that's worked for me over the years, I know for you and a lot of our students and a lot of the guys out there is, we've got to understand here that I think that, when you trade things and you start to accept that price and news are two very different things, you can start to get that consistency. For me, trading based on price is one of the things that does give me consistency because I'm trading on that. It's and also easier because here's a question I got. What do you look at? What news is the right news? Let's just break it down for just a second on here. Like you look at earnings seasons, right? All of the big institutions, all of the big media people tell you, earnings is so important. Quarterly earnings, all that. I'm not being funny. You want to look at the history books? More corporations have lied about their earnings than anything else. I say, do you trust the media? Do you trust corporations? Do you trust governments? Do you trust anything in this world that you hear on the internet? And be like, no. I say, well, why would you trust this information then? I can look at a chart. I can look at a chart like now, like we are on here, and we'll go back and we'll look at the Dow Jones right now as we're on here, and I can look at this chart, Brian, and I know the price. I mean, that's it. I know the price. I look at the price action over the last few days. It's easy to read, right? That's it. Right now, it's relatively high. I'm in an area based off of, I'm coming to a major area, resistance area where I don't want to be a buyer. If I want to be a buyer, I want to buy it a little bit lower. That's it. It helps me time. And it's freaky how sometimes the market will make a move and then the news comes out to support that. Have you seen that happen in your own career, Brian, where a move will happen and then the news comes out afterwards and then everyone then starts chasing it? Because to me, I feel like, well, today, if we have a flat day in the market, the press have got to report on why we're having a flat day in the market. But then people will use that news to then trade the next day. What are your thoughts on that, sir?
So this is going to tie in perfectly to something that I want to talk about. So look, when I worked on the New York Stock Exchange, I'm going back, pre-2008, and I couldn't tell you how many times at like 10 to 4 with the market closing at 4 p.m. Eastern time, buy 200,000 shares of this one example is sticking out in my head of Barnes and Noble.
All right,
okay?
Yeah, the bookstore, yeah.
I can't tell you when it was. I can't tell you any prices, stuff like that. But information leaked to somebody, and they said buy 200,000, and the guy was coming through the phone. He's like, just buy it, finish the order. I literally had to take it up like $2, but they wanted to buy it. But the next morning, news came out, and it gapped up like $4 or $5. Wow. So that's where you could see something fishy's going on. Right. You may want to pay attention to that.
Yes.
Okay. With the price action, because honestly, over the last couple of years, the news is being really exposed now for, depending on who you listen to, they tell you things a certain way. And that's why when you listen to the news, it's confusing. It's like manipulated. Like I don't even have it on anymore. I just want to go by charts, because at the end of the day, charts don't lie. They don't lie. That's where the truth is. You could tell where the high quality.
Now, you may not agree with the price, right?
Exactly.
Right.
Exactly.
And it's like using this. Like I don't agree. Like if we go back over, and let's just quickly, because this is such a great point that you're making right now, and I feel like I'm always ragging on GameStop. That's because I can never seem to get a PS5 from them, so that's why I hate them right now. Okay, no one can get a PS5, right? It's not about you as a company, but I like GameStop. So I'll be honest, as a nerdy gamer and comic guy, I hate buying everything online. I like to go in a store. I truly hope the GameStop are still around in 5 or 10 years, because it's nice to physically go into a store. I've got nothing against it. What I'm against is all the BS around GameStop that's been happening, right? And do I think that the company itself, when I look at the charts right now, I don't care about where it was at 483 up here. Even as it is right now at 235, it's not a $235 stock, right? Now, I don't care what the hype is. I don't care what the news is. I don't care what any of that is. It's not that. But the point is, it doesn't matter what my opinion on that is. It doesn't matter if I think it's a good stock or a bad stock or any of that stuff. What matters is right now is I can look at that chart and just see, here's the value of it, and make a realistic decision on whether it's a good time to do anything with it, right? It doesn't matter. I feel 100%. Like if you focus on the price, your opinion matters even less, but that's if you're willing to do it the right way, It becomes a real, otherwise to me it just becomes a game of, like I say, cat and mouse. You're chasing, you never know what's going to go on as well. I feel like charts mean I don't have to have an opinion. If we go to this, tell me this, Brian, we'll go back to the S&P right now and take a look at it. Let's look at this let's go look on a weekly chart. Look at this weekly chart, the S&P 500 right now. Let's just take it back to October of 2018 to where we are now. It's shocking, isn't it, that we're where we are? Would you say? If you especially look at it from late 19 through 20 and into today, it's ridiculous. Fundamentally, I don't believe there's any reason why we're higher now than we were in 2007. We're not any better off. We're probably in worse. We're in more debt than we've ever been in. The world's on the edge of falling apart. Yet the market's where it is. And again, people want to talk about fundamentals. There are no real fundamentals to support where this price is right now, but it's in an uptrend, so you got to kind of go with it, right?
Well, one thing that I want to say though is, where else are you going to put your money? You
right.
know?
Well, then
where else are you
to me,
go?
That's fundamentals from a different perspective, though, right?
Yeah,
that's what
course.
I call real world fundamentals, logical fundamentals, right?
Yeah.
It's not based on economics. That's not based on economics of, that's based on, I'm not going to get a return anywhere else, so I might as well put it in the market.
Yeah, what are you going to put in a CD?
Right?
What's a
People
CD? I don't even
do.
know what a PCD pays. Are CDs even still around? I
And
don't
if
even
someone
know.
reminds me, says, what's a CD? I'll say, don't worry about it. As you two say, forget about it. Right?
Exactly. But you think about it, look, a lot of it doesn't make sense to me, but who am I to make a decision? I just got to go off of what is presented to me and just follow my rules.
Yeah.
Okay. If it keeps doing something, okay, and my rules say this, keep doing it. And once I have an opinion and I stick to those opinion, that's going to lead to me becoming very emotional,
Yeah.
and then I'm done. And then
Yeah.
you're done.
Yeah.
You got to be smart about this. You really do. You can't fight it. Just kind of take what's given to you, and if you don't see it, don't do it.
Exactly.
But that's another thing, being patient. Okay, a lot of people are so scared of missing out. I mean, we can go talk about a million different things here, but getting back to our original conversation about the fundamentals and stuff, you know, look, I'm not a fundamental trader. I
Right.
never was. I never will be. I just go off of charts and what they're presented to me. Some people, want to think that they're an economist or an analyst or something like that, but meanwhile, they do whatever else for a living. I'm like, you know what?
Good luck to you.
You're not
That's
on the
fine.
inside. You don't know the big picture. You don't know what's going on down the
None
road.
of
You don't
us
know what
do.
things are in a pipeline with these companies. Like, you don't know a lot of these things,
And
you
none of
know?
us do. None of us
No,
do. But it doesn't have
no.
to stop. It doesn't stop us from being able to do our thing in the market, though, does it? That's the thing.
Yeah.
People say,
Yeah.
when I asked you, I was like, who cares? Why did it do that? I don't know. I don't
Right.
care.
You
People were
know,
buying it. Why? I don't know. You spend more time worrying about why and missing out on the opportunity, right?
yeah, exactly right. And that's why, it's called risk to reward, because this is risky what we're doing, but we're managing our risk.
Yeah.
Okay. We know where we want to get. We've identified high quality areas, whether we're looking to short or get long or whatever it may be. And we're going to have our stops in the appropriate place. And people, if you're out there and you just don't trade without stops, use them. Okay.
Yeah. Yeah.
Because
Yeah, go on, carry on.
the one time you don't have it in, it could ruin your account.
Well,
All right.
the markets tend to reward bad habits. It will repeatedly reward your bad habit, and then one day it will punish you for it, and it's a game over.
Oh,
That's
big
the
time.
problem, isn't it?
Big time. Oh, yeah, exactly. 100%. I agree with that wholeheartedly.
I want to throw something at you before we go into your call, my put. And I think this has been a great conversation, and I hope anybody listening on here, Louise, Brian, Amit, and all the regulars on here, have got something for this. And if you're brand new and you're looking at the recording of this right now, I hope it's going to help you negotiate the waters, because they are complicated waters, but trust me, they don't have to be. And I gotta say this. I think that I've found in my own world really the true skill in being a trader, or an investor, is not caring. And let me explain what I mean by that. Is like not caring about the outcome, saying I've got a plan, I've got evidence that supports this action I'm taking, enough of it, and I'm just going to keep going with that. Like, do you understand? It's more of a skill. In fact, the less you think, the better you do. I know my own trading, the less thought I give it, and the more I just make it about signal, buy, signal, sell. There is no brain power involved. There is not even analysis involved anymore. The analysis has been done because now I'm just screening for the setup repeatedly. And I think that's the true skill that anybody needs, right?
Well, the bottom line is confidence. Okay. Confidence in believing what you're doing. And when you hit that buy or sell button, not having buyer's remorse.
Yeah.
And then what happens a lot of times, people sit there and watch every little tick. Okay. You're going to drive yourself crazy. You got to commit to the process and be okay with the outcome because you followed your rules. All right. You design these rules based on back testing things that you've done in the past, obviously. All right. So it comes down to trusting your process, having proven results from that process, and then getting into it and being okay with the outcome. And that's the confident part. All right. I mean, that's pretty much the nuts and bolts of everything that we do here.
Yeah.
Okay. And, look, I have a lot of people that I've talked to or taught or worked with or whatever that are shell shocked or PTSD or something like that. And like, they're expecting to get into a trade and lose every time. That's because they're
Yeah.
unwilling to be coachable. They're unwilling to be disciplined or patient or whatever it may be. They're chasing price. They're becoming emotional. And when that happens, you fall into this trap of just kind of like the hamster wheel, just over and over and over and over again. And you got to break that. You got to break that by taking a step back, looking yourself in the mirror and saying, okay, I know I could do this, but I need to change a couple of things.
As
You know,
as lead coach at StockAbility, Ryan Watkins says, too many people think, it's just education and building your knowledge base. Knowledge is one thing. This is a
yep.
game of taking your knowledge and then using that to develop a skill. It's a
You got to
different,
apply it. Yeah.
very, very different world. One final point on this as well, and I say on the fundamentals. And again, it does get my back up. In the long run, yes, I think that fundamental analysis, using news and all that, can help in super long-term stuff. Okay, I mean, and let's look at this. I'm going to pull this up to show you. Okay, I want to go over to the website.
If you know what you're looking at.
If you know what you're looking at, right? Well, exactly. Yeah. Look, let's just go over here, just in Google ideas, fundamental analysis. Let's just zoom in so we can see the description of fundamental analysis. It's the method of evaluating an intrinsic value of an asset and analyzing the factors that could influence its price in the future. Could influence it in the future. This form of analysis is based on external events and influences as well as financial statements and industry trends. That is never, ever going to help you time when to get in and when to get out. Ever. And what gets my back up, Brian, is these newsletter companies that charge hundreds and hundreds of dollars a year to do all this analysis, and then they go, oh yeah, when the market goes down, it doesn't care if it's a good company, when the market goes down, we'll just ride the storm out and buy more. And it pisses me off. It's like, what about the poor guy or girl who bought the absolute high based on your freaking recommendation and has now lost 70% of their net worth? You think they're going to stay calm and ride out the storm? Because they may ride out the storm, but what they've then got to do is wait to make that 70% back, which is actually 140%. I think it's irresponsible. Just because I've seen plenty of good companies go out of business for different reasons. It's not just about, and there's also plenty of good companies that never hit their goal. There's plenty of companies out there that have done really well and have got great share prices, and you're like, why? Like Chipotle for one. Yeah, the food's okay, but really, the performance of a company like that, you're like, seriously? It irritates me a lot. And this is why I feel that having a technical skill to at least be able to put that with this fundamental analysis and say, look, these guys are saying this, but let me look at the charts and know where my cutoff point is. Let me know when enough is enough. That is only going to help you. Anyone here who's a junkie to this stuff, who's, believes in it, that's fine. But get yourself a skill of understanding how to reprice. Understand a little bit of technical analysis. Here's technical analysis. Technical analysis is a trading discipline employed to evaluate investments and identify trading opportunities in price trends and patterns on charts. Technical analysts believe past trading activity and price changes of a security can be valued indicators of future price. Not just past. I think that's a miss, and that's what gets me about technical analysis, Brian. That to me is a misquote as well, because I certainly don't just believe that past stuff tells me what to do. I'm going to look at what the market's doing now, because if things trending up and there's something to stop it, I want to buy it. I just want to buy it at the right time, right? So I don't think there's any real clarity. This is my point. Go on the internet to try and educate yourself. Don't be surprised if you get shafted. That's all I'm going to say. Because it takes more than just that, It really, really does. But it makes me think, Brian, there's just that bit more to it. And I find these newsletters very irresponsible in this sometimes, don't you? I mean, it can be like, it's like just weather the storm out. Can you afford to weather the storm out? You need some price analysis to be able to at least make a decision on whether or not it's worth holding on to it, because you could cut the thing off and then buy it back at a cheaper price, and then you haven't wasted all your time holding on to a loss, right? I mean,
there
are other ways of doing it.
Well, people also, someone might have a really good call on a stock or something like that, and somebody could have made a lot of money with them if they were going to their letter. Okay, their trade letter or whatever it may be. And then they might have another call, a couple weeks later, and the person say, well, I'm going to buy it because so-and-so has been dead on, hot lately. Let me buy it. And they're not going to have a proper risk management. Next thing you know, it fails miserably. And then it keeps going down and down and down. Like, I just gave back everything that I made in those prior calls. Now what do I do? Now you're stuck. Okay. It's
because the reality is, as long as you buy good value-based companies, you'll be fine. No, as long as you buy good value-based companies for the long term at good prices and manage your downside, you'll be fine.
Yeah, exactly.
Add the other bits onto it, people.
That pretty much is the conclusion to everything we've been talking about right there.
It really is. Said. So look, if I had to pick one, price over news, I'm always going to pick price. Here's your vote. Price or news if you had to pick one?
Me?
Yep.
Price.
Excellent.
Price.
Only use news if you understand price. That's how I'd say it right now. Little tip for anybody looking at this right now. Great little website that we all use at StockAbility here. Now, I've always used for years. This is where I check news, forexfactory.com. This I do religiously. I want to know when major news is coming out. If I'm trading the US Open and I know that there's a major news release coming out at, say, 10 a.m., which there was today, we had pending home sales figures came out today that are down. Oh, finally, pending home sales is down. Hopefully, we're going to get a bit of a slowdown in the market. I might want to look at stuff like that, especially if I'm in a position. It's not going to change my analysis. It's not, if I'm long or short on the market, going to change my analysis, but it's going to make me look left and right and say, hey, maybe I'll take the trade after the news because I could get some volatility, right? That's the safe way you use news and economic data. You use it just to say, hey, look, we had preliminary GDP figures came out today, right, which pretty much held steady. It doesn't make sense for me to be clicking buttons at 8:29 when the news is coming out at 8:30. That's the safe way. I say this. Respect the news. And that's what you do as a trader. You typically respect the news, right? But to me, that's a bit different in fundamental analysis. And then on the flip side, figures are fairly good and the market's done nothing with it anyway. So back to our point, right? Who cares?
So, here's a very good point where you brought up, though, the GDP this morning.
Yep.
So the number actually came in at 6.4, which is what, one point below. But we don't know what the big institutions or the analysts, economists were looking for. Were they looking for 8%? Were they looking for 6%? You know what I'm saying? Like, we don't know what those numbers are.
Yeah.
And as a normal trader or a retail trader, I don't even know how to break down the GDP or what number to look for. You know what I'm saying? So like I don't know what that number means. Right. I'm like, oh, it was worse than they forecasted, but other people could have been expecting more or less or whatever it may have been. I don't know. I don't know. So just stick to the price action.
And do you need to know? Do you need to know? Before, I don't want to have the final word on this because I want to get to your call and my put as well, but I'd like you to have a final word on this if possible, Brian. So just tell us this for everybody at home. When and only when would you personally use any kind of news? Because we're clearly established that you are most definitely a price trader, right? So when and only then would you use it?
Okay, so if the FOMC is going to have their meeting, on a Wednesday afternoon, yep. I'm going to pay attention to that. I want to know when that is exactly. If I'm in an options trade or if I own a stock, I want to know when they're having earnings.
Right.
Okay. I also want to know when, say I'm in a tech sector and I'm in a sector where Apple's the leader. I want to know when Apple's earnings are as well, because that might influence the whole entire sector.
There you go.
So, those are really the big reasons why I would look at news. And the little things like every day, when I log on, I look at what news is coming out today in the US markets and stuff, but I don't really, stress about or try to dissect it at all. I don't know better. I'm just going to go by, okay, we're, in a high quality resistance area. We're in a high quality support area.
Yep.
Let me wait, do nothing, do we need, take the trade or do nothing.
Yeah,
and that's really what it comes down to.
Beautiful. I love it. What a great topic today. Really enjoy talking about this,
All right, cool. Yeah, me too. It was good.
Just fun, and it never gets old talking about this. I've had arguments.
Yeah, it's good.
I've had arguments.
I love it.
I've had arguments till I was blue in the face with people about this stuff. But hey, listen, people always swear by what they've done when it works, and they swear at it when it doesn't. So you're always going to get that. I go off of longer term consistency. I go off of what's worked on multiple times. Brian, it's time for your call, my put. We've got about 5 minutes before we got to wrap things up, my friend. Your call, my put. You are my guest. You are now my promoted co-host.
There you go. So I have the honors of going first. Perfect.
God, you're going to have such a great Memorial weekend, taking that new title to the weekend with you, aren't you?
That's right. I'm going to walk around proud and banging my chest.
I'm going to send you a little pin badge out this weekend, all right? So, okay.
Yeah. All right, so I'll go with call.
You're going to go call, so it means you're bullish on the upside, right?
Sorry, yes, I'm bullish.
Cool.
So I want to look at the XLV on a weekly chart. It's got to pull back a little bit once you pull up the chart, you'll see what I'm talking about.
Anyone who doesn't know what XLV is, guys, XLV is the healthcare sector. All right, let's pull this up.
Yeah, the ETF.
The ETF of the healthcare sector. Let's go bring this thing up. Here it is. XLV, spider sector. Well, let's just take a look. I mean, wow, what a fantastic uptrend we've been in here since 2009. Yeah. I mean, That thing has just been long-term uptrend. Here we are at the moment on the daily charts as well. Here's your weekly charts. I mean, it's just bull, 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 bull. You are bullish. I can see why. Where are you sniffing around for an entry on this?
The weekly chart, I don't know if you have it up there at all. I can't remember the exact location. I think it was like 152.
All right, let's zoom in here. Here it is, weekly chart. This is where we are right now. We don't really need as much data as that. What we're looking for, in the context of an uptrend, ladies and gentlemen, we like to see these pullbacks, don't we? In any kind of trend. These give us our better buying opportunities like this. So I guess we're seeing it. To me, this needs a decent pullback, though, Brian.
It does.
I don't like it right now. I mean, we could be really aggressive on this right now, and we could say, well, you know, there's a level of support around here. I don't know. That seems a little bit tested. I mean, what do you think? Maybe a little bit lower.
That right there. I like that zone area.
So you've got, I've got you here about 117.50 on that, between 120 and 115.
Yeah, that general area right there. I think the one on top is way too aggressive for me.
Well, this one
I'd rather have I'd rather have like a nice deeper pullback before we make another move to the upside.
Yeah.
You know, it's got a nice trend on the way up. I mean, you can see that it's almost like a perfect channel if you want to talk about that. So I think that would be in line with the bottom of the trend line as well as that high quality support zone. And once again, you know, I would have my risk a little bit below that, but I think if it pulls back to there, I think we could take out the current highs and push north of 120. What's that, 126?
Yeah, absolutely. So, highs are 125.66 that you can see right at the top here. These are the current highs. So what I marked this area off. I'm kind of looking at this as quite a transitional area, just about 115. It's got about 116. So again, what I'd be hoping to see is a pullback and then that continuation higher off of there, which would, as you rightly say, losing a bit of old school technical analysis, give you a kind of a nicely respected trend line. Because to me, this market is in somewhat of a channel right now. Man, we are going old school on here. Look at that.
Yeah, we are.
I mean, Brandon Wendell be happy right now if he was watching the show. So all good on here. This one's dedicated to you, Bubba. All right. So, this one I'm seeing on this, I like that for a pullback on there. Around that 116 mark, I think would be great. Yeah, I like it.
Yeah, and you know, and everybody out there that's looking at it say, well, it looks a little overdone to the buy side. That's your opinion. Just go by what it's given to you.
Well, you want to look at long term as well, like from a fundamental perspective. I think XLV as an ETF is a really nice portfolio at a good price.
Yeah.
I mean, to me, the day we stop investing in healthcare, progression is probably a dark apocalyptic day. So out of all the XLs, and there's XLV, there's XLZ, there's XLE, which are all the sector ETFs based on the spiders, the select sectors. I think XLV is always going to be one that's going to be in my personal portfolio, but again, at a good price, right? At a good price. You think this is a longer term play, Brian?
Absolutely. Yeah. You know, you just said it, you know, where the time we stopped, contributing to healthcare, you know, I don't know if that's ever going to stop.
No, and also I say this, one thing I like about this as well is I still like this price. You know, even during the COVID dip that we had in the market right here, you know, we didn't go crazy. We fell from 100 down to 75. Not terrible, you know, not terrible for somebody who was holding on. And a lot of people do hold on from that. But again, there are better ways to do it. There are much better ways to do it. And again, I'm more of an advocate of taking the stance of, hey, when this drop happened, you know, getting out somewhere around here, letting the market recover and then buying back a support zone here. And then you would have kept all your gains and then got a great entry for more upside here. Patience also pays. A lot of people think, one of the old adages, you gotta be in the market to make money. No, you don't. Sometimes the best way to make money is to be the hell out and get back in at the right price, right? So that really reeks of that. I love that. You had another one you said you wanted to say because you're in the giving kind of mood as well.
Baidu.
Let's take a look at Baidu. Right, long, short. What's the call on Baidu, my friend?
Oh, sorry. Long.
Double long.
Double longer.
Double long. So, here we go. Oh my God! Now this has not had. Now this is like the Asian Amazon, right? You know, that we're saying here,
yes.
Right?
Yes. The Chinese Google.
Chinese Google even. Yes, so Chinese Google. You go. All right, cool. I mean, look at this.
So the area we're in right now, you know, you could take a shot with it, and then your target would be, I think that's 220 or so. Got about 30 points of upside. Yeah. But the zone I like better is down around the 140, 150 level. Yeah, right there.
Yeah. I mean, it's definitely holding these lows right now at 180, but I think it's got some stiff competition at 220, which you were just highlighting right around here. Which I wouldn't be surprised to see some downside on there. So what we're really looking at is something around here, this 140 area, I guess, right?
Yeah, where it's trading right now is a pretty strong transition area,
Yeah.
and it already held it. So it's curious to see what's going to happen at this level.
That does read to me this move that we've seen on this chart, Brian. This push that we had too far, too fast.
Yeah,
And I
yeah,
don't like it. And you see that when I see this price, and this needs to reset itself. And I think at 140, that is a bargain, absolute
yeah.
bargain. And that's one of those ones I'd be looking at probably those, in like I know Dan Bustamante loves our other, lead coach and founder of StockAbility. Long-term leaps could be justified in a situation like this as well. Something to take out, and if the option volume's
Yep.
there. And the open interest warrants it too as well. Great little market on there. I love that. Thank you for sharing. All right, let's go. I guess it's down to me to do the put. I always get given the bearish plays. I don't like this, right? I don't like it, but it's because I'm gonna say this is a short-term bearish play. And I'm kind of goes against the grain, but it is what it is right. Gold, I got to say. Now, you had a good call on gold recently when you were on this show. Tell us about that, because I know you want to reap in your glory. So tell us a little bit
Yeah, I
about
do.
that.
Once it broke out that I don't remember the exact price, but it broke out of that bottom basing area and or pausing area. I think it was on a daily chart or
Let's go
weekly
take a
chart. We were
look.
looking at it. I don't remember exactly.
This pausing area here was what you were talking about a couple of weeks
Yeah.
ago when
So
we
when
were
it
getting
broke up,
this sideways action here, and then we broke out of this area of 1725 and
yep,
off
I
we went
said,
and used a beautiful little transition area here for a
oh
pullback.
yeah,
So imagine
awesome. I
it
love
hit
those.
resistance, hit this area here, and then it's been just going on a tear ever since.
Boom.
Look where we topped out recently at 1910, right across here. You
It's a 200
see?
point move.
It's
200
been a
point move.
great move. I don't think this daily chart. Great call, Brian. Great call. Kind of like my call on Zoom. Man, we crushed Zoom on this show. I swear, anyone looking at that, has done pretty well on the Zoom side of things. We'll talk about that on another show. Let's look at big picture. I look at this right now and I'm like, eh. People say I look at too big a charts sometimes. I'm like, I don't care. If you think I'm dull, if you think I'm boring, I don't care. Let's get dull, let's get boring, because this, I don't care, right now is making a series of lower lows and lower highs, and we are back in a resistance zone area right now on the big boy monthly chart. I'm sorry, I am not. That's a freight train. That's our whole fleet of freight trains. I'm not getting in the way of that. And there is no way on earth, I want to be a buyer up there. In fact, if anything, I would expect a little bit of downside pressure in this market and then to reestablish itself at a lower price. Big picture, Brian, that unnerves
Yeah.
me to want to be a buyer there, you know?
Well, you brought up a good point too, where I find that a lot of traders, they look at too small of time frames,
Yeah.
and you get whipped
And they
out too
get
much.
crushed.
Yeah, exactly. Look at the bigger picture. What's the overall sentiment?
Yeah.
Okay. And then you could start to refine your zones and stuff like that, whatever. But you need to get that big picture down and say, okay, what is the market telling me?
Yeah.
Okay, or the stock or whatever you're going to be trading. And then you can say, okay, it's doing this. Okay, now let me start breaking it down and find those high quality zones where I want to trade with the trend.
Yeah. Yeah, absolutely. If I had to draw a line in the sand right now, I'd like it that little bit higher, but around here, just shy of 1950, 1940, we've got a little bit more upside. But I tell you, it wouldn't surprise me if we started to turn around here. But anything above between 19 and 1950, I am a bear. And I'm a bear down to at least, I'd say, around 1750. Ideally, I wouldn't want to be a longer term buyer
Yeah.
till we get back down to that 1700. I think with the indecision in the market, and indecision is the name of the game right now, we're going to see a little bit of chop on gold. We are. But it's playing its way out, and we saw that rise in it when we had that sell off a few weeks ago and a lot of concern. And then it's now. Markets are settling down a little bit again, going into Memorial Weekend, coming into the summer, a little bit of profit taking, and then we'll see on the next leg. But man, gold has got its work cut out for it in this major area here. 1950, 2000, we ain't taking that anytime soon. I'm bearish on gold down to about 1750 at least. That's my put on the show today. Wow, Brian, it's been a whirlwind once again. On the show here again. A great time. What you got planned this weekend, my friend? Are you taking... Well, no, you're not. You're not having an early weekend. I can tell you that right now. But you got a long weekend coming up, right?
Yeah, I do. I actually
You deserve a rest. You've been working
I'm
hard. I know.
I might be driving down to Myrtle Beach
Yep.
this weekend, which is a little over about 2.5 hours away from where I am, and spend
Nice.
a couple days down there
Nice.
with the wife and dog and stuff. So
Lovely.
be nice to get to the beach, hang out, see my best friend, and just chill out.
That's what it's all about, my friend. Well, look, it's always a pleasure on the show. Never a chore having you on here. Absolutely love it, my friend.
Always, it's great. Love it.
Thank you for your input, and let's keep it coming. Guys, the newly promoted co-host of Take Stock Live, Brian Dumaresq, joining us live from North Carolina. Have a great rest of your weekend, my friend. We'll see you in a couple of weeks or so, okay?
Yeah, take care, everybody. Have a good day.
Thank you.
See you. All right, see you.
Ladies and gentlemen, that was Mr. Brian Dumaresq, student momentum coach at StockAbility. Great guy, good all-round dude. Love having him on the show. Love working with him on here. And we were just talking about price versus news. I think he made his point clear. I made my point clear. I hope you enjoyed his feedback just as much as I did as well. Big shout out to our viewers here. Edward Pierce, Amit Kaur are on here as well. Bob Pellegrin, our top fan. Louise Fox, Brian Dennis, Javier Joe, and all of you guys who are looking at the show now on YouTube Live as well. We are on YouTube. We are here on Facebook Live. Man, we're everywhere. Beaming in on your phone, your tablet, your TV, and all the places you didn't expect as well. It's always fun to be here on the show with you as well. We talked a lot of things. Remember, we're trying to tailor Take Stock Live, into an entertainment, educational resource that can help you negotiate the sometimes choppy and sometimes scary but wonderful world of the financial markets. If you are looking to take that education to the next level, find out a little bit more about what StockAbility does, who is the power behind Take Stock Live. Let me show you how you can do that. The simplest thing for you guys to do is head on over to here, StockAbility.com. This here is our website right here where you can see us right now. Zoom on in here, StockAbility.com, and you will find an endless ton of resources available to start whetting your appetite for what is to come moving forward as well. And then if you're ready to take the next plunge in with actually interacting with our incredible coach team of Ryan Watkins, Dan Bustamante, Graham Spruce, Alexander Perner, and yours truly as well, scroll on down to the bottom and you will find all of our upcoming webinars as well. Our next webinar is going to be on June 8th at 12 Eastern, which is Investing Can You Afford to Retire with the mighty Ryan Watkins. We're also having another complimentary webinar of Focus on Forex with Alexander Perner coming up on June 22nd. And I'm going to be hosting a brand new one on here, The Path to Becoming a Funded Trader. Don't complain that you don't have enough money to trade. We're going to talk about how you can get yourself to the elevated position of letting somebody else give you the capital to trade with and move on there. It's not easy, but it can be done if you do it the right way. Brand new webinar. What we specialize on doing here at StockAbility is helping people get and achieve their dreams and their goals in the financial markets. That is going to be on July 13th. 5 p.m. Eastern with myself as well. In the meantime, if you're willing to say, hey, I want to find out more about short selling, news, analysis, and actually work with a consultant who can help me on here, best place you can go to is right to the top of our website here. Click on where it says education and scroll down to the third option, which is the trading and investing orientation. And right there, you can find an on-demand class of about 12 to 15 hours of content with all of our team on here, teaching you over 20 lessons all about how to start negotiating the financial markets and the things that you need to know and cutting out all the BS of the stuff you don't. That is our program available to purchase right now, and it's interactive in your own pace, your own time, working with the StockAbility consultation team. Go check it out, drop us a line, and let us know a little bit about how we can help you. We are here if you need us as well. Great to be a part of this. All right, my friends. It's just after 1 p.m. Eastern. I hope you guys here in the US have a wonderful holiday weekend. I hope everybody in Europe has a wonderful holiday weekend. I'm taking the next few days off as well. It's always a pleasure to be on the show as well. We will be back this time next week at our regular time of Thursday at 12 noon on Facebook Live and on our YouTube channel as well. Both Facebook and YouTube, Take Stock Live, noon Eastern time. Every one of our shows is recorded, so you can go on and look at all the previous shows on Facebook or YouTube. Remember, if you want to get questions to us, though, best way to do it is watch live. And if you can't, because guess what? You've got a busy schedule, go look at the recording, post your questions. We're always checking them out. Email us. You're going to see at the end of this show as well the best way you can reach us too. We are here for you if you need us. Never, ever a problem. Guys, I'm Sam Evans. This has been Take Stock Live. It's been an absolute pleasure with you on the show. Enjoy the rest of your weekend. Stay well, stay healthy, stay healthy, and good trading. Take care, everybody. Thank you and good night.